Good evening. This is Ken at Tortoise Capital. This is the solution for our quiz on EWW, the ETF for Mexico. This is from an intraday trade from April 26, 2019. This is one of a set of over 100 quizzes that we are producing on our techniques. So the first thing I want to look at is from the open on 1 minute charts. We've got yesterday's close at this dotted line, the open at this dotted line. So the quiz really first is what is it that we see after about the first 30 minutes into this. So small gap up, lots of topping tails, and but finding support all the way up. So you get an open, a surge and recover, a surge and recover, a surge and recover, with higher lows and upward buying pressure. It gets to a certain distance, about 8 or 10 minutes in. So you get a rolling over of the RL10, and it crosses the RL4. That's the baby dragon. And then you get a 1, 2, 3 reversal. Now, from here, you could reasonably decide to aim for a return, at least to close the gap. And so if you did that, you're looking at an entry around 46.55, and your target would be down here around 46.41. So maybe 14 cents worth of play. If you don't take this one, there's another opportunity over here where you have now the dragon has rolled over and a failure to make a new high, and now the PSAR is decaying, and you have a lot of volume at this price level. So we could count that as a statistically significant limit for the day so far. And so when price in the form of the RL10 breaches once, comes back, just barely gets through the dragon and collapses a second time, you can get the same entry here at around 46.55, but with a little more confirmation that you have a high and a lower high in the RL10, and the pressure from the PSAR and the dragon rolling over. So a reasonable trade frame to set up if you're aiming for 15 cents. If you do and you're entering at 55 and 66, you have an 11-cent upper limit to the peak of the RL10. So your execution stop would be somewhere around there, so 11 cents, and you're aiming for 15, not quite 2 to 1, but you might believe that if it got down here and failed further, then maybe this could go to the next level of support on the way down. So if you play either one of these with this PSAR or the swing high of the RL10 as your exit, you actually get that 15-cent move, so you get more than one execution risk and pretty orderly move all the way down. And then it finds support where you would expect to find support at the yesterday's close. And now you observe the VWAP is still up here. And this is failure to fail further. The RL10 reverses and it crosses it crosses the RL4. You notice right around here we got into the winter. It went from summer to fall to winter, and now here we have failure to fail further, and we have the winter becoming spring, and just a short distance back to the summer. So that's not really much of a move. You get the first surge when price comes through the dragon. The RL10 briefly comes through, but is already rolling over. It comes down to find support above the PSAR, and the RL10 starts rolling up, and now you notice that it's getting ready to breach the dragon on the second move up. And now what we have is, if we place a resistance level here above the RL10, and we notice a higher low in the dragon and the RL10 rolling up, we could put a entry above this blue line at the RL270 fair value with, so you're getting an entry around 46.49 and an execution stop around 41. So about an 8-cent and execution risk, and you have rising lows. The PSAR is already involved here. We're into the spring, and so we might actually take that trade. Um, so let's pull this off. And so we're going to get our there's an RL10 crossing the dragon, breaching our blue line. So an entry here. When you get to this limit, what you have now is we've drawn this blue line across from the top of the dragon and the top of this RL10. And so at the yellow line, we're already up around 46.62. So we're almost 10 cents into that position. You get to decide here if now that you've breached this statistically significant high of the day, we discount the long tails, but we're going with the statistical high of the day. Here you and then at this line you get to decide at either one of those if you want to add a second position or get your position to no lose plus dinner for two, either one of those. So the note, you get to decide if it's worthwhile developing skill in reading price action with our framework in order to add positions on emerging momentum. And it's really a bit of a span of control as you learn how to drive this particular vehicle. So what I mean by that is that you've got about a 7 cent uh, initial risk, and by this time you're already about 15 cents into that. And you can think about at these yellow lines adding a position on momentum as it breaches the previous swing high, because you're now 25 or 30 minutes into the day, and so the opening book is cleared, and now you've got the morning move starting to develop. So to either one of these, you're really taking the position that I'm either going to use this to get my risk out or to add positions at one or both of these. And certainly by the third yellow dot, what you have is a the first leg up has really cleared, and now it's starting to roll over. At this yellow dot, I would not be offended if you had exited there. And the reason is I want you to notice that the move is stalling, and you can tell that from the RL, uh, the MACD has rolled over, so the summer has given way to fall. So it's starting to decay. You get the 1, 2, 3 exit, and so you might be exiting somewhere in here and just say, you know what, I grabbed my move. So if I entered at 49 and I'm risking 8 cents and I'm at 82, that sounds like 33 cents. Oh, I already wrote it. 33 cents of capture on a zero point 0.7 initial risk. So you've got really a 4.5 to 1 execution reward to risk capture on the first position. Now, at these, if you elected to add positions at some or all of these, you could as much as double what you're holding on to here. Now, since the RL10 has just barely rolled over and then starts to resume without ever even entering the dragon, so I'm not offended by an exit here, but if that doesn't get you out, and now you get this second leg starting to roll over, and now you get a 1, 2, 3, that's where I like to take it, because now you have price clearly coming through the dragon. The RL10 has rolled over, and the time period in this move, I mean, there's only 1/3 of this leg before it started rolling over. So now you're really talking about an exit here anywhere north of 46.82, and you're doing really well. So if you can get this, awesome. But a 1, 2, 3 is certainly reasonable. Capturing 4.5 to 1, that's 33 cents. And then I want you to notice that so your gain compared to the loss, and now you're into the fall. If you're trying to make this work in your mind, saying no, I can hold on, just realize the time to harvest is in the changing of the seasons. By this time, when the RL10 has left its own little red river and it's very close to the zero line, this is where winter really picks up. Notice it doesn't take much price decay for this to continue to collapse. And this really means failure to follow through is information. So given the opportunity to find support here and go to create another leg like this one, didn't happen. What that means is that the guys on the 3-minute chart did not see this as an opportunity. They're not coming in to continue to provide support on momentum. In fact, if anything, they're looking to maybe get short around where this red dot is because they want to bring it back to the previous support level back here. So this area where this is sort, in my view, they're not later than exit points. So any exit in that 7 or 8 minute time frame is certainly reasonable. And now what you have is when the piece are starting to collapse, you have the dragon rolling over, makes a second lower high and starts to roll over again. So here at the yellow dot, this is where you actually get to start deciding if you want to be short. Maybe you could get short here, but after a nice surge, maybe not. But by this time, you must certainly be thinking about a return back down here to the previous support level. Um, and if that doesn't get you, then this one is a collapsing dragon gets you. This would be an owl move, by the way, because you had a unambiguous move, P1 outside the river. The RLXD has occurred, and a second time, and now the dragon is rolled over, the 30 is rolled over. You can almost argue this is the owl. This is certainly an has owl properties, maybe even a pocket. So either one of those I would accept as a short. Certainly this one, the collapsing dragon, is a short. This move from the swing high back to the RL270 is unsurprising because that's a move back to fair value, and I want you to notice that it's not that a move back here to the VWAP is unsurprising. Those are the least surprising moves of all. At this point, what you're looking at is you would consider, excuse me, gonna sneeze. Pardon me. At this point, you got to compare EWW to the rest of the market and say, if the rest of the market is failing, and if this was not as strong as the rest of the market, then I could actually get short on something that was weak. But if this was a really strong move in a strong market, then maybe I don't want to get short that. I'm maybe waiting for a resumption. That's a um, that's a decision that you get to make based on time of day, sector, volatility considerations, market moves itself, where it is inside its swing move. All things would go into judging whether or not you would take this short. But certainly by this time, you have a downward bias, and so now you're looking at these as shorting opportunities. So that's the point we want to make here. The things to look for then. The things we're looking for is how to get this subtle read on the preconditions that lead to what in retrospect looks like an obvious move in the length of leg one. And again, it was finding support. So it was a gap up, buying pressure, failed to where it should fail, find support instead of failing further, and then 1, 2, 3, and take off. And so this is a breakout, almost like a P4, if you will, or a pocket entry. And then these reinforcing points, or at least confirmation points. So if you only get that, that's still 4.5 to 1 on the execution risk, and that's almost an R on position sizing risk. And so, knowing the size of these moves and knowing that EWW is a nice intraday trender, that's what makes it a nice candidate. And I just want you to notice how the MACD histogram and the four seasons give us clear indications about the changing of the seasons and the mentality that you want to adopt based on how long into the trade you are and what the price is doing. So knowing what the market will give you, and then being able to manage your mental states in each of these locations. And then some of the continuation or chain tradings, if I'm looking to get long again, or if I'm what I think about when I'm trying to get short. So that's the quiz for April 26, 2019 on EWW, the Mexico ETF. It was a nice way to start the day getting paid. So thanks for your kind attention.